Well, it's time to head over to Chicago and find out what's going on among the traders on the floor. Let's go there right now and see who we have on deck to talk. Why, I believe it's Oliver Sloup. He is with Blue Line Futures in Chicago, and he's reporting for duty. How you doing, Oliver?
I'm doing well. It'd be nice to see if these grains could find a little bit more footing here, specifically corn and beans. Just had a lot of weakness, and I think a lot of that has been just on the lack of bullish news. And right now we're down towards the lower end of the technical support levels for corn. It just kind of keeps grinding below these, and now the next pocket we're looking at 366 to 368 and a quarter. This is the low end of the range from September and a must-hold area. We've been making a trend of lower highs and lower lows, and we've seen funds continue to add to their short position. Last week they added about 10,000 contracts. They're sitting net short about 120,000 contracts. So below 366, there's really not a whole lot of support until those contract lows. So this is kind of a must-hold area through the rest of the week.
If they're that much net short, that sounds reminiscent of a year ago, doesn't it?
It does, and there's just no reason for the funds to get spooked out of their positions just yet. We know that there are a lot of production concerns, and we echo those concerns, but the real thorn in the side of the bull camp continues to be the lackluster demand, and I wouldn't be surprised to see that keep a lid on things at the very least. Now, when we start looking a little bit further out, obviously past this week's trade and probably in the March contract, we're going to start looking at that demand maybe shifting a little bit in the new year. So that's going to be something to keep a very close eye on. Speaking of that March contract, we do have December options going off the board here this week, and so a lot of that volume will shift from the December contract to March futures.
Let's go back to those corn futures again and get you updated on price. The December is down 2.5 at 368 3/4. We're within a penny of our low of the day. March down 2 3/4. If we look at our soybean trade, we now have the January contract down 3.5 cents at 914 3/4. By the way, back on the corn, I'll mention that we did sell 132,000 tons overnight, and it's really not lifting the market at all. Soybeans on the March down 3.5 at 927 1/4. On the wheat trade, we currently have the Chicago December contract now trading 3 1/4 higher at 506. Now this is interesting. Oliver, this market continues to just kind of grind higher as we go during the day when it started out kind of under pressure. What happened?
It started off a lot weaker for the wheat, but they found really good technical support, $4.96 to $5 for that Chicago contract. December, not only psychologically significant, but also represents the 50, the 100, and 200-day moving average. You saw a little bit of pop down there. I'm sure option expiration is playing a little bit of a role into this. There's probably a lot of open interest around that strike, that $5 strike, so that's going to be something to keep an eye on going forward. If we were to get past option expiration and break down below support, there's probably another 15 to 20 cents of downside of potential risk, and the funds have been kind of liquidating a long position there. So there's a little bit of a caution flag for us on that front. On the Kansas City side of things, we remain a little bit more upbeat. 415 to 417 is trendline support from the contract lows, as well as a 50-day moving average and a key retracement. So long as we can defend this on a closing basis, I think there's more room to work to the upside in that Kansas City contract.